Welcome back to Talk Tickers. This is the show where we strip mine earnings calls so you don't have to.
We bypass the fluff, we ignore those safe harbor statements, and we get straight into the machinery of the market.
I'm your host, and today we are turning our attention to a company that, well, if you believe the tape, they effectively just declared themselves the operating system for the future of the internet.
We are talking about Cloudflare, ticker symbol NET.
And the date is Friday, February 13th, 2026. And honestly, if you were watching the After Hours tape yesterday, you saw something pretty spectacular.
Oh, yeah. This wasn't a slow climb. This wasn't some, gentle drift upward. It was a violent repricing.
Violent is a strong word,
Yeah.
especially for a tech stock that isn't like a biotech company waiting on an FDA approval. But looking at the chart,
Yeah.
violent feels appropriate.
It does. I mean, we saw the stock close the regular session at around $179.98.
Right around there. And then the print hits the wire, the algorithms read the press release, and boom.
It just rockets. We're seeing extended trading go all the way up to the $196 level.
So that's roughly a 9 to 12% pop, depending on exactly where you caught the wick.
It was a massive move. But to understand why it was massive, we have to, context this properly. You can't just look at the pop.
No, you have to look at the sentiment before the pop.
Exactly. Going into this print, the market was nervous. The stock had been down about 11% over the last 3 months.
Right. I remember the chatter. There were real questions about valuation. People were asking, is the growth durable?
Is the multiple too high? All of that.
It felt like the market was just looking for a reason to sell this thing off.
The bears were definitely sharpening their knives, and what we got yesterday afternoon was a fundamental reassertion.
A reassertion. I like that. This wasn't a relief rally because things weren't as bad as feared.
No, not at all. This was a re-rate because the entire thesis just got a massive upgrade.
So the narrative shifted. In the span of about 45 minutes, we went from, is this stock too expensive, to, oh my God, the demand is durable and the future is here.
That's the perfect way to frame it. And the one-liner summary for this deep dive, if you only listen to the first 5 minutes, is this. Cloudflare didn't just beat their numbers. They effectively told the world that they are the plumbing, the roads, and the traffic cops for the agentic AI future.
Agentic AI.
Yeah.
Okay, we are going to hear that phrase a lot today, aren't we?
It is the core theme, the Agentic Internet. But before we get into the philosophy of AI agents buying toasters and rewriting the web,
We need to respect the numbers.
we have to, because the numbers are the reason the stock is up 12%. You can have the best story in the world, but if you miss revenue, the stock goes down, period.
Fair point. Let's hit the results snapshot then. Pure signal, no fluff. What did they put on the board that got Wall Street so excited?
Okay, top line revenue for Q4 came in at $614.5 million.
And that is up 34% year over year.
34%.
Okay, let's pause on that for a second. For a startup doing $10 million in revenue, 34% is fine. It's expected.
Right.
But for a company of this scale, doing over $500 million a quarter, accelerating to 34% growth it's heavy lifting.
It's exceptionally hard. The law of large numbers usually dictates that as you get bigger, your growth percentage slows down. It has to.
But Cloudflare is defying gravity here. And that revenue number, it beat the consensus estimates by what?
By about $23 million, a really solid beat.
Okay, so a solid top line beat. What about the bottom line? Are they making money or are they just burning cash to get that growth?
They are printing cash where it counts, so non-GAAP EPS came in at 38 cents.
Just beating the $1.27 consensus.
Just squeaking by, but a beat is a beat. Operating profit was just under $90 million, giving them a 14.6% margin.
And the free cash flow.
Strong, really strong, $99.4 million.
I did notice you said non-GAAP there. If we look at the GAAP numbers, the strict accounting rules, is there a different story?
There is. If you look at the GAAP numbers, there is still a net loss. But here's the thing about the current market environment.
The street doesn't care.
The street does not care right now. With this level of top-line acceleration, they're willing to look at that free cash flow, the actual cash hitting the bank account, and ignore the GAAP loss for now.
They're prioritizing growth and cash generation over accounting profit.
100%.
That makes sense. But the real story, the thing that I think really lit the fuse under the stock price was the guidance.
Oh, absolutely.
Usually you get to Q4 earnings and companies like to sandbag Q1. They lower the bar so they can step over it later. It's the classic under-promise, over-deliver setup.
It's the corporate playbook, right? You set the bar low for the new year so you look like a hero in April.
Cloudflare did the exact opposite.
The exact opposite.
They raised the bar.
They absolutely did. They guided Q1 revenue and full year 2026 revenue above estimates.
For the full year.
For the full year. They are projecting FY 2026 revenue to land between $2.785 billion and $2.795 billion.
That is bold. That is really bold.
It is incredibly bold. I mean, when a management team looks you in the eye and raises the guide for a year that is just starting, that signals massive confidence in their pipeline.
They aren't guessing. They see the deals.
They see the deals.
Wow.
That forward-looking confidence is the primary fuel for this rally.
Okay, so the numbers are rock solid, beat and raise. But numbers are just the result of the business. The business is changing. And this is where we need to unpack what CEO Matthew Prince calls Act 4.
This concept of the Agentic Internet, this is the intellectual meat of the episode. And honestly, if you take nothing else away from this deep dive, you need to understand this paradigm shift. It explains everything. It explains why Cloudflare is winning.
So break it down for me. What is the Agentic Internet?
Okay, think about the internet for the last 30 years. Who is it built for?
For us, humans, eyeballs, clicks.
Exactly. It was built for human consumption. It was built for me to click a link, wait for a page to load, read a paragraph, maybe look at a picture, and maybe click an ad. It is fundamentally based on human speed.
Right. And human limitations. Circadian rhythms. We sleep, we eat, we get bored.
Or get distracted.
Yeah. If I'm shopping for something, I might look at 3 websites, get tired, and just buy the one that has the prettiest logo.
Precisely. That is the human internet. But now we are moving to agentic consumption. We are moving to a world where software AI agents are the ones browsing the web.
And the multiplier effect here is, what they're saying is staggering.
It's staggering. Matthew Prince used a great analogy on the call. He said, think about a human buying a toaster.
The classic toaster example. It always comes back to the toaster.
It works, though. You might open 5 tabs. You compare prices on Amazon, maybe Best Buy, maybe a review site. You read 2 reviews, you get distracted by a text message, and then you die.
Okay, that's 5 requests to the internet. Sounds about right for me.
An AI agent tasked with finding the absolute best toaster doesn't open 5 tabs.
No.
It can query 5,000 websites in the blink of an eye. It can cross-reference pricing history, shipping times, warranty text, and user sentiment across the entire web instantly.
5,000 requests versus 5. That's a 3 order of magnitude difference.
And here is the kicker. Agents don't sleep.
Right.
They don't have circadian rhythms. They don't stop browsing at 11 p.m. because they have work in the morning. They don't take lunch breaks. They operate 24/7, 365 at machine speed.
So we are talking about a massive, and I mean a massive, increase in the volume of internet traffic.
Yeah.
But is this theoretical? Is this just Prince painting a sci-fi picture to boost the stock, or is it actually happening?
It is happening right now. And they dropped a data point on the call that actually made my jaw drop.
What was it?
They said in January 2026, just last month, the number of weekly requests generated by AI agents on Cloudflare's network, it doubled. Doubled.
In 1 month.
In a single month. That is not linear growth. That's not even a gentle curve. That is the beginning of an exponential J-curve ramp happening in real time.
That is terrifying if you run a server.
It is. And this leads directly to why Cloudflare is positioned as the control plane. You have to remember a key statistic.
Which is
Cloudflare sits in front of about 20% of the entire web.
1/5 of the internet.
So if an agent wants to crawl a site, buy a product, or scrape data, there is a 1 in 5 chance it must pass through Cloudflare's network to do it. There's no way around it.
So they are the gatekeepers.
They're the gatekeeper, but they are also the enabler. This is key. They win twice here.
Okay, let's break that down. How do they win twice?
First, on the inbound side.
Let's explain that.
Okay. Imagine you are the retailer selling the toaster. Your website is getting hammered by these agents. Now, on one hand, you want the agent to buy your toaster. That's revenue.
You love that bot.
You love that bot. But you don't want that agent or 1,000 other agents to crash your server with 1 million requests in 1 second.
Right. You want the sale, but you don't want the DDoS attack. It's a fine line.
Exactly. You need someone to manage that traffic to distinguish between a good bot buying something and a bad bot taking your site down or scraping your pricing data to undercut you.
You need a smart bouncer at the door.
A very smart bouncer. And Cloudflare is that bouncer. That's the inbound side.
And that makes perfect sense. So what about the second way they win?
The outbound side. This is where it gets really interesting. Developers are building these agents on Cloudflare's platform.
On workers.
On workers. And this brings us to a concept that Prince mentioned called vibe coding.
I love that term, vibe coding. It sounds like something a teenager would say on TikTok.
It does, but it's actually a massive technical trend.
It really is. It refers to this new wave of coding where you aren't writing every line of syntax yourself. You aren't agonizing over semicolons and brackets.
No, you are using AI to generate the code. You are vibing your way through the architecture. You describe what you want in plain English, and the AI writes the script.
What does that do to the volume of software being built?
It explodes it. I mean, it completely changes the economics. The cost of generating code is dropping to near zero.
And when the cost of something drops to zero?
The volume of it goes to infinity. If you can build an app in 5 minutes for 10 cents, you build a lot of apps. You build an app for every little task.
But where do those apps live? Where do they run?
That is the critical question. If you are building a lightweight AI agent that needs to run fast and talk to 5,000 websites, do you want to host that on a clunky, centralized server deep in an Amazon data center?
No.
Do you want to deal with spinning up a virtual machine, managing the OS, doing the security patches, all of that overhead?
No, I just want the code to run. That's it. Instantly.
You want it running on the edge, milliseconds away from the user and the target. And Cloudflare Workers is the platform for this.
And Prince noted that most of these vibe coding platforms are facilitating this by deploying directly to Cloudflare Workers.
It's becoming the default backend for this new wave of AI applications.
This connects to something Prince said about the hyperscaler trap. And I think this is a crucial differentiation for investors who might be listening and thinking, well, won't Microsoft Azure or AWS just win this? They are the biggest clouds in the world.
It's a completely different model. It's the difference between renting a car and taking a taxi.
Okay, I like that analogy. Explain it.
The hyperscalers, Amazon, Microsoft, Google, their business model is fundamentally about renting you the car.
They want a long-term lease.
They want you to lease a GPU for a year. They want you to commit to capacity. They say, here is a server, you pay for it 24/7 whether you use it or not.
Right. It's a sunk cost for you and a guaranteed revenue stream for them.
Cloudflare's model is the taxi. They sell you the work done. You pay for the milliseconds the code runs.
You only pay for the ride.
You only pay for the ride. If your AI agent needs to run for 3 seconds to check those 5,000 toaster prices and then shuts down, you only pay for those 3 seconds.
Which, in a world of AI agents that might spin up for tiny ephemeral tasks and then vanish, is infinitely more efficient.
It's efficiency, but it's also speed. And this is critical. In an agent world, connection speed and security at the edge matter more than centralized storage.
So Cloudflare isn't trying to be the place where you train the massive model.
No, that's for the hyperscalers. That requires thousands of GPUs running for months. That's renting the whole fleet of cars.
Cloudflare is where the model lives and works once it's trained.
It's the inference layer, and that is where the volume is. Training happens once, but inference happens billions of times.
So the thesis is, the internet is getting 100x noisier and busier because of agents. Cloudflare is the toll booth and the traffic cop for all that noise.
That's it in a nutshell.
But let's ground this. Is this just a cool story, or are big companies actually writing checks for this? Because vibe coding sounds cool, but it doesn't pay the dividend.
The enterprise momentum is real, and frankly, some of the specific deal examples they gave on the call were startling.
Startling how?
They aren't just testing this stuff. They are ripping out legacy vendors to put Cloudflare in. Big, entrenched vendors.
There was one quote that stood out to me. It was regarding a U.S. government entity. Now, the government is not known for being on the cutting edge. Not at all. They are usually 10 years behind. I assume they're still running Windows 95 in some basements.
Yeah. Fackles, probably. But Cloudflare signed a $2.2 million zero trust deal with a U.S. gov entity.
Okay, a decent-sized deal, but it was the quote from the security team that got me. They said they were shook by the simplicity and the automation.
Shook. That is not a word you typically see in a government procurement report.
No, it is not. You expect words like compliant or sufficient or adequate.
Not shirk?
What does that tell you about the state of their old systems and the competitive landscape?
It speaks volumes. It speaks to the pain point. That government entity was likely using a first-generation zero trust incumbent. We won't name names, but think of the legacy hardware vendors.
Box sellers.
Exactly. It was probably manual. It was clunky. It was hard to maintain. Cloudflare came in and automated it. It just worked. This implies that even the slowest moving sectors, the dinosaurs of the industry, are reaching a breaking point with legacy security.
They can't handle the modern threat landscape.
And they are willing to switch, even the government.
And then we have the whales, the really big fish. They mentioned a leading AI company. They didn't name them, of course.
No, but we can guess it's one of the big labs. An OpenAI, an Anthropic, an xAI, someone in that top tier.
And they signed an $85 million contract.
That is an $85 million two-year deal. That is a massive, massive number.
And the details are important here. They didn't just buy one product. They selected Cloudflare as their single long-term infrastructure provider.
This is the key. They looked at the hyperscalers. And you have to imagine, if you are a big AI lab, Microsoft or Google or Amazon is probably throwing free credits at you.
Oh, for sure. Come run on our cloud. We'll give you a discount. We'll give you support.
Right. And Microsoft basically owns a huge piece of OpenAI. Why would a major AI company turn down free money or easy integration to pay $85 million in cash to Cloudflare?
There has to be a compelling reason.
Strategic neutrality.
Explain that concept.
It's a subtle but incredibly powerful point. If you are a major AI lab, do you really want to run your entire infrastructure on Microsoft Azure when Microsoft owns a huge chunk of your biggest competitor?
No.
Do you want to run on Google Cloud when Google is building Gemini to kill your product?
You don't want to house your secrets in your enemy's basement.
Exactly. Cloudflare doesn't have a competing large language model. They aren't building a Cloudflare GPT to put you out of business.
They are neutral. They are the Switzerland of AI.
They are the arms dealer that doesn't have its own army. And in a war, the arms dealer does very, very well.
That Switzerland status is becoming a real competitive moat. They also mentioned a Fortune 500 tech company, a $45 million deal where they displaced a longtime incumbent.
And the reason given was fascinating. They said the hyperscalers couldn't handle the complexity of global third-party apps.
Which is supposed to be their bread and butter.
Right. This creates a new category of buying behavior that they talked about called the pool of funds.
The pool of funds, it sounds like a slush fund.
It's kind of like that, but in a good way. It's essentially a utility model. We are seeing these huge checks, $45 million, $85 million, where the customer isn't buying a specific list of SKUs.
They're not saying, I want 50 firewalls and 20 load balancers.
Exactly. They are handing Cloudflare a giant bag of money and saying, we don't know exactly what we will need next year, but we know we will need you.
So here's a credit pool. We will draw down against it as we grow.
And that signals massive trust. That's not a vendor relationship. That's a partner relationship.
It's like your power bill.
Yep.
You know you're going to use electricity. You just don't know which appliances you'll turn on yet.
Precisely. And if we look at the metrics of scale, this is all bearing out. The $1 million plus customer cohort, these are companies paying Cloudflare more than $1 million a year.
Yeah, big spenders.
They added 961 new logos in 2025. That total is up 55% year over year.
55%. That is serious enterprise adoption. And sales productivity hit an all-time high. This is important because a couple of years ago, the bear case on Cloudflare was that their sales team wasn't enterprise ready.
Right, that they were great at selling $20 plans to developers, but people doubted they could close the C-suite.
That narrative is officially dead.
It's dead. Mark Anderson, the president of revenue, has clearly retooled that team. They are winning RFPs requests for proposals against the giants.
And the bookings number confirms it.
Bookings grew nearly 50% year over year. That is the fastest growth rate since the peak of 2021. The sales engine is fixed, and it is firing on all cylinders.
Okay, let's pivot to the financials and operational discipline. Because while the growth is sexy and the story is fantastic, I noticed the margins had a little bit of a wobble. Not a crash, but a wobble.
A slight dip, yes, you're right to point that out. Gross margin came in at 74.9%.
And their target range is 75–77%, so they missed the bottom of the band by 0.1%.
They did.
Now, usually when a SaaS company misses gross margin, investors freak out. It implies pricing pressure. It implies they are discounting to win deals. Is that what happened here?
No, and that's the good news. It's not pricing pressure, it's traffic mix.
Okay, what does that mean?
The AI traffic, the agent traffic, is exploding so fast that the free-to-paid ratio shifted temporarily. You have all these agents and vibe coding experiments hitting the network. They consume bandwidth, which costs Cloudflare money, but they haven't all converted to enterprise contracts yet.
So it's actually a leading indicator of demand, even if it drags the margin down by a fraction of a point today.
It's exactly that. It's like letting people into the club for free because you know they'll buy drinks once they're inside. The top of the funnel is just overflowing.
So management isn't worried.
Not at all. They were very clear. They are unbothered. The unit economics are fine. And if you look at their CapEx capital expenditures, they are expecting to spend 12–15% of revenue on CapEx in 2026.
Put that in context for us. Is that high or low?
It is incredibly low, especially compared to the hyperscalers. Compare that to a Microsoft or a Meta that is spending tens of billions upon billions on H100 chips.
It's a rounding error for them.
It proves the efficiency argument. Cloudflare is getting more work done per dollar of hardware than almost anyone else because their architecture is unified. Every server in their network can do every job. There's no waste.
Efficiency is great, but let's talk about stickiness. The net retention rate, the NRR. This is the heartbeat of a SaaS company.
It's everything, and it ticked up to 120%.
120%. That was up 1% quarter over quarter and up 9% year over year.
A really strong trend.
For the listeners who don't live and breathe SaaS metrics, explain why 120% is the magic number.
120% means that if Cloudflare didn't sign a single new customer next year, if the entire sales team just went on vacation for 12 months, they would still grow revenue by 20%.
Just from existing customers buying more.
Just from existing customers expanding their usage. It is the engine of compounding. It means the bucket isn't leaking, it's overflowing.
And that connects back to that pool of funds strategy we were talking about.
It does. Once you were in, you just keep finding new uses for the platform. Oh, we need email security. Turn it on. We need bot management. Turn it on. We need workers. Spin it up. It's frictionless.
It's the must-have bucket. I think Matthew Prince said vendors are being sorted into nice-to-have and must-have.
He did.
And when you have 120% NRR in a macro environment that is still a bit choppy for software, you are definitely in the must-have bucket.
Absolutely. No question.
I want to spend a minute on the future business model, this Act 4 that they tease, because this feels like it goes beyond just selling security or compute. This is about saving the publishing industry. And maybe the internet itself.
This is fascinating. It's the most forward-looking part of the call. We alluded to it with the Agentic Internet, but here's the core problem.
What's the problem?
If I am the New York Times or a financial research blog or even an investment bank, and an AI bot comes to my site, reads all my content, and then summarizes it for a user in ChatGPT, I get 0 clicks.
Right. The user never visits my site. I show 0 ads. I make $0.
It's a parasite model. The AI eats the content, gets smarter, and starves the creator of the content.
And if the creator dies...
If the creator dies, the AI runs out of new training data. It's an Ouroboros eating its own tail. The internet breaks because nobody can afford to create high-quality content anymore.
It's a real existential threat to the open web. So how does Cloudflare fix this?
Cloudflare is pitching itself as the solution. They want to be the neutral broker.
The marketplace.
Yes. They actually signed what they called a media deal, a $3.1 million contract for a product called AI Crawl Control.
Okay.
This media company was getting crushed by AI scraping. Cloudflare allows them to see who is scraping. Is this OpenAI? Is this Anthropic? Is this a random startup from a dorm room?
So visibility first. Just knowing who is at the door.
Visibility first. But the end game, the real vision, is the marketplace. Cloudflare wants to facilitate the transaction.
So they go to OpenAI and say...
They say, okay, OpenAI, you want to scrape the New York Times to train your next model. That will be $0.001 per article. We will collect the toll, we will verify the data, and we will pay the publisher.
That is profound. Cloudflare becomes the clearinghouse for intellectual property on the web. The digital customs agent.
And this isn't just a theory. Management noted they're getting calls from investment banks about this.
Investment banks? Why do they care? They're not publishers.
Oh, but they are. Their research is incredibly high value. If a hedge fund's AI is scraping a bank's proprietary equity research without paying for a license, that's theft.
It's not just news. It's high-value financial data.
Exactly. And Cloudflare is the only one positioned to stop it because they sit at the edge. They see all the traffic.
Microsoft can't do this neutrally.
They own the AI.
Google can't do this neutrally.
They are the AI.
Cloudflare is Switzerland.
It always comes back to Switzerland.
This is a massive call option on the future of how the internet is monetized. If ads die and we move to micropayments for data scraping, Cloudflare collects a percentage of every single transaction.
It's Act 4. Act 1 was application services. Act 2 was security and zero trust. Act 3 was workers and compute. Act 4 is the data marketplace. And we are just seeing the very first green shoots of that right now.
Okay, this is all incredibly bullish. The fundamentals are reasserting. The vision is huge. The stock is reacting appropriately. But we are talk tickers, and we like to get a little creative.
I think I know where you're going with this.
It is time for our This Is Not Financial Advice segment.
Standard disclaimer, we are podcasters. We are not your financial advisors. We are just two people with microphones having a conversation.
Please do not do this. This is a thought experiment. It's for entertainment purposes only.
All right, with that out of the way, let's hear it.
We call this trade pitch the infinite noise spread.
The infinite noise spread. I like the sound of that. It sounds chaotic.
It is chaotic. Here's the setup. We have established that AI agents are increasing internet traffic by 10x, maybe 100x, maybe more.
Correct. The noise floor of the internet is rising exponentially.
We've also established that these agents do not look at display advertising. A bot doesn't care about a banner ad for shoes. It doesn't have feet.
Correct. The CPM model, the cost per impression model, breaks down completely. An impression from a bot is worthless.
So 50%, then 70%. Then 90% of web traffic becomes non-human agents. Two things happen. One, the infrastructure providers, the toll booths, get rich.
Because they charge for bandwidth and security. They charge per request. They don't care if it's a human or a robot as long as the toll is paid.
Right. And two, the legacy ad tech networks that rely on viewability and human eyeballs fell off a cliff.
Why?
Ad fraud rates spiked to unimaginable levels because nobody can reliably tell if View is a human or a sophisticated bot. Advertisers get spooked, and they pull their spend from the open web.
They retreat to walled gardens like Google Search or Amazon where intent is higher.
Exactly. So the trade is...
Let me guess.
Go for it.
You go long the toll booths, specifically Cloudflare Net. As the noise increases, the toll collector wins regardless of the traffic quality.
That's the long side. And you go short.
You go short the human eyeball aggregators, specifically legacy ad tech networks. Maybe you short a basket of programmatic ad stocks or find an ETF that is heavily weighted in display advertising.
You are betting on the fundamental decoupling of internet traffic from human attention.
Exactly. Traffic goes to infinity, human attention stays flat or even goes down. Cloudflare monetizes traffic. Ad tech monetizes attention. You want to be long the thing going to infinity and short the thing that's a fixed resource.
It's a wild speculation, but the logic holds up if you believe the agentic thesis. If the internet becomes 90% machines talking to machines.
The billboard business is dead, but the road building business is booming.
The infinite noise spread. You heard it here first. Again, please don't do it, but think about it.
It definitely gives you something to chew on for the weekend.
All right, let's wrap this deep dive up. Recap for the listeners who are just tuning in or maybe zoning back in from their commute.
Simple. Cloudflare crushed the quarter, revenue up 34%. They are guiding for acceleration, which is rare, and a huge signal of confidence.
They are unequivocally the plumbing for the agentic AI revolution. That's no longer a story. It's showing up in the numbers.
Big enterprise is writing massive $85 million checks. They're signing pool of funds deals, which shows incredible trust.
And management is confident. Matthew Prince said on the call he wouldn't trade places with any other CEO in the world.
And the market, for now, agrees. The stock is up big. The skepticism has been washed out.
So what should investors watch for going forward?
Two things. First, keep an eye on that net retention rate. As long as it holds 120% or, ideally goes even higher, the stock deserves its premium valuation. That's the engine room.
And the second thing?
Watch the Act 4 developments. If they announce a major partnership to monetize content for a big publisher or a financial institution, that is the signal that the next leg of the growth story is beginning.
We will see you for the next print. Until then, keep your stop losses tight and your thesis loose.
Thanks for listening.